We're rolling into the early afternoon on this Fed Day Wednesday, and markets are in classic wait-and-see mode. I'm Grant Mercer, and this is Storm Stock Solutions. Indices are relatively contained as traders brace for Jerome Powell's final policy meeting of 2025 and try to decode some unusual signals coming out of the bond market. What's changed in the last hour is that the Fed narrative has really taken center stage. According to new reporting from MarketWatch, history shows the S&P 500 tends to post modest gains on December Fed days, but this meeting could be different. It's not just the rate decision itself, it's the tone around the end of Powell's tenure, the updated projections, and how the market reads the handoff to the next Fed leadership. Traders are positioning around whether this is the beginning of a clearer easing path in 2026, or the Fed staying higher for longer than people are comfortable with. Tied to that is the ongoing uncertainty over who actually takes the chair next year. MarketWatch notes that Kevin Hassett is still viewed as the front-runner to replace Powell, even though his prospects have dipped, and a final decision from former President Trump may not come until next month. That delay keeps a cloud of policy uncertainty over the rate complex. Equity investors might not care on a tick-by-tick basis right now, but for banks, rate-sensitive tech, and long-duration growth names, the perceived bias of the next chair matters a lot. On the strength side, one name traders are watching closely is Broadcom. Coverage highlighted by MarketWatch points out that Wall Street is calling the stock a top pick heading into Thursday's earnings, largely on enthusiasm for its custom chips tied into the AI build-out. That enthusiasm is a double-edged sword. It signals strong demand and secular growth, but it also sets a very high bar. In this kind of backdrop, any wobble in the outlook can turn expectations into an area to handle with care very quickly. Industrials remain another bright spot in today's narrative. As MarketWatch has been discussing, that sector has been red hot this year, but it's become a stock picker's market. That means instead of a broad rising tide, you've got investors rewarding companies with clean balance sheets, pricing power, and exposure to long-cycle demand, while punishing the weaker names. Into the afternoon, pros will be watching whether that relative strength holds if bond yields keep climbing. Speaking of yields, one of the more interesting sleeper stories right now is actually in the Treasury market. MarketWatch reports on what some are calling a bond market mystery. Rising long-end yields that don't line up neatly with the usual explanations. Apollo's Torsten Slok suggests this could be a warning sign of trouble ahead, whether that's concern over deficits, term premium, or future inflation risk. For stocks, higher long-term yields can compress valuations and rotate money toward more defensive or cash-generating names. So this is a background theme that could suddenly move front and center if the move accelerates after the Fed. Away from pure macro, there are also a couple of quieter personal finance and real asset stories on the tape. One MarketWatch column details a family dispute over kids paying rent on investment properties they've already effectively financed, while another explores creative ways grandparents can help the next generation financially. Those pieces don't move intraday markets, but they do reflect how elevated rates, housing costs, and wealth transfers are shaping real-world behavior. Context long-term investors often keep in the back of their minds. Into the next hour, all eyes are on the Fed statement and Powell's press conference. I'll be watching how stocks react relative to that historical pattern of modest December gains, whether the bond market mystery at the long end deepens, and how high expectation names like Broadcom and other AI plays trade into the close as we line up for earnings. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer. Stay sharp, stay steady,